What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is March 21st, 2022. Please go ahead, click the like button on this video and subscribe to my channel. Today we're going to talk about the price action in the indices. We're going to go through my trades for the day. We're going to talk about this pullback and put it into context. Before we do that, quick first disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account to any one of my trades or anyone's trades for that matter. All right, so after 4 days of a rip-roaring, face-ripping market rally, we had our first day of a mini micro dip pullback. So box scores, we had the S&P 500 finish down just 0.03%. We had the NASDAQ QQQ finish down 0.4%. IWM small caps were down 0.88%. We had the Dow Jones down 0.5%. And we had the ARK Innovation ETF, our biggest loser for the day, down 2.72%. You can see that pretty much everything closed somewhere around the middle of the day's range. And you can see that volatility increased in 3 out of 4 of these headline indices. The VIX actually declined by 1.42%. And breadth was negative across the board. And you can see small cap breadth was only 29%. So overall, today was a pretty ambiguous day of price action. Let's take a look at our Finviz heat map, and we'll see the best performer for today was energy. So we can see energy did very well, and then we can see Tesla and Nvidia also outperformed. Let's take a look. Pretty much everything else was sort of like middling, or you can see there were pullbacks in some of these various areas of the market, but overall a pretty mixed board. Let's check out our energy stocks. And what was interesting about today was that there were so many divergences. So let's pull up, we have our ES right here. Take a look at these 10-year treasury futures. These just completely slipped into the abyss, and that pretty much means the market is pricing in more rate hikes. So more rate hikes and potentially more inflation that's leading to higher 10-year treasury yields. So to be honest, I'm actually quite surprised at how well the market did, given the fact that these treasuries really slipped today. And take a look as well at crude oil. Crude oil's up 7.26%. It made some parabolic highs about a week or two ago, and now it looks like we're on the verge of retesting those highs. So that's certainly not an ideal scenario. As energy prices go up, inflation expectations have to go up with them. This afternoon, we did have Powell speaking, and Powell confirmed that, hey, we're likely looking at a 50 basis point rate hike come May. So keep in mind that 50 basis point rate hike, is it priced into the market? It certainly is to a degree. Like, let's take a look. We'll actually pull up our Fed rate monitor tool. So check this out. We have 6 weeks until the next Fed meeting, and as of right now, we have a 59.4% chance of a 50 basis point rate hike, and then we have a 40.6% chance of a 25 basis point rate hike. But again, that next meeting is in 6 weeks. There's a lot of time and space in between now and the next Fed meeting where the market can go up, down, sideways, etc. Let's take a look at our S&P 500 in the after hours. You can see it actually flipped positive. These S&P 500 futures are up 0.1%. I know a lot of people are confused by this move. Oh my gosh, how is the market not slipping into the abyss? This doesn't make any sense. Well, just take a look at the bigger picture. I mean, the market was up for 4 days. Now today it basically went sideways. There's nothing really abnormal about that. We retested this monthly points of control at 44.74.25. As of right now, we have some resistance there. Then we also retested this 50-day simple moving average, and we found support there. So yeah, we're inside of this monthly value area. Effectively, we're in no man's land right now, but we are above the 20-day simple moving average. My trend model is at a +3. So this is the kind of situation where I could see people getting led astray, where they go, no, I know the economy's suffering. I know the Fed's tightening. Like, there's no way the market can keep going up. But what happens if we get up to 45.63? Definitely want to be prepared for that. I'm actually looking at that level And take a look, that almost corresponds with this 20-week simple moving average. And we can see on some of these prior bounces, we did retest that level and we actually overcut it, on these past 2 attempts. So I think if the market were to get up there, I think that would really put the hurt on a lot of investors that are really just stubborn shorts and they don't want to believe that the market could go up even for a day. And also take a look at this. So this right here, we already went through our heat map. Take a look at this, quarter end rebalancing. So really what's going to impact market prices are supply and demand dynamics. And we can see, granted, this was from Friday, but we had almost $250 billion estimated to be bought for quarter end rebalancing for sovereign wealth funds, mutual funds, as well as pension funds. A lot of that rebalancing has probably occurred, and that might be why we've had such a really nice 4 or 5 day rally. But rest assured, there are still more equities to be purchased as a result of this rebalance. So for all we know, the market could end up having a very nice sequence while we have some positive rebalancing flows, and we also have this positive seasonality. So check it out. Into April, the market tends to be pretty strong. So we really could have the perfect storm to engineer a nice short squeeze. Let's take a look. Let's look at the composition of today's sideways move in the market. And let me just switch this. Take a look. So there was a lot of red on here. It's not like, oh my gosh, the market was just amazing, whatever, it was flat. Under the surface, there's a lot of rotation going on. So the solar stocks remain buoyant. They were only down 0.6%, but you can see KWeb, these Chinese internet names, fell a full 6.6%. We had a lot of these more risk on areas of the market, like the ARK Innovation ETF down 2.72%, home builders down 2.82%, and the best performers on the day were the gold miners. So is that really like risk on? No, not really. Gold miners are leading. Then we had materials up 0.83%, and we had energy up 4.03%. So this still seems like a very ambiguous tape. We don't know which way inflation is going to break. We don't know if we're going to get a decoupling from China. We don't know if this Russia and Ukraine situation is going to escalate. Looking at our style factors, we have the high beta style factor down 0.62%. So again, this isn't very risk on. We had that as the biggest decliner. In biggest gainers, we had high div, low vol, which is a more defensive area of the market. We had value stocks, and we had defensive. So yeah, this sideways move, we are seeing some rotation out of growth and into value. So for that reason, I did not do any trading today. I didn't trade any options, didn't trade any common stock. Right now, given what we're seeing and given that the market is sort of in no man's land, there's really no reason for me to transact. If we get like a definitive move above this 44.74, that would mean, hey, it's likely that we're going to test 45.63. But take a look here at our hourly chart. This is something I've been very cognizant of. Our weekly value area high is all the way down here at 43.46. So even if we were to get a pullback to that level, that would just be like a business as usual pullback. So I don't want to get caught diddling in the middle here and just start loading up on longs or shorts, because I think the market still has some decision making to do. And for all we know, we could get a nice buoyant market for the next week because of the quarter end rebound. Then the market could just go right back to slipping into the abyss. So I'm just trying to keep a very open mind. And for flow reasons, we could see higher prices, but for fundamental reasons, we could see lower prices. So yeah, for me, I do have a couple of common stock positions, and I do have some S&P 500 puts going out to May that I put on Friday. And for right now, I do feel pretty comfortable with that. Some names that are sticking out. Take a look at MP. This is the name that I currently have on. Mountain Pass. This name continued its breakout today, looking very strong. And you can see some of these other names like Tesla. At this point, it's everyone's patriotic duty to buy a Tesla to get off of dirty energy. Now, I don't know. It seems like the market is kind of anticipating that, or like putting a premium on this stock for that reason. You can see we tagged this monthly value area high, but again, once we tag that level, then we pulled back. So for right now, things remain ambiguous. And in terms of getting long, right now we can see even the VIX is trading towards the lower end of its recent range. So it is kind of tough to get long on like day 5 of this sequence rather than, just being long from several days before. So with that being said, waiting for more information, it is perfectly fine to just be like, hey, don't really know what to do today, so I'm going to do nothing. So yeah, looking forward to tomorrow, getting some more information. As of the close, we did get some news that I believe some Chinese officials, I believe it's like they're being sanctioned or something. Yeah, we're imposing visa restrictions on some Chinese officials. So definitely look to see if that has any follow through into the Chinese market as it opens for trading tonight. And take a look at KWeb. It had a pretty violent move to the upside, and now it is consolidating sideways. All right, everyone, that about does it for this market recap video. Hope you all had a great trading session. Stay patient out there, and I will see you all tomorrow.